First, ChatGPT came along and disrupted the entire internet's business model. Now its owner, OpenAI, is looking to disrupt the semiconductor space as well. The company, according to Reuters, is getting closer to creating its own in-house custom AI chip. Deirdre Bosa has more in today's Tech Check. Deirdre?
Hey, Kelly. So this is really a strategic move designed to give OpenAI more choice for training and running their AI models and reduce the reliance on Nvidia. But reading between the lines, this may have just as much to do with its evolving and increasingly complicated relationship with Microsoft. When Project Stargate was announced earlier this year, OpenAI and Microsoft, they tweaked their agreement. Microsoft was no longer the exclusive cloud provider to OpenAI, but it moved to a model where Microsoft has a right of first refusal for cloud computing hosting. So even though Microsoft now allows OpenAI to negotiate with other cloud vendors like AWS or Google Cloud, those companies have no incentive to give OpenAI a good price. Microsoft will just match it. Negotiations over cloud contracts, they are fierce and time-consuming. As one source I spoke to put it, negotiating with a company that has a right of first refusal contract with Microsoft, that is a waste of time for the others. So OpenAI developing its own custom chips may be one step toward untangling its Microsoft relationship. Project Stargate, Masasan, SoftBank, Oracle, three more factors that could give OpenAI even more leverage in its AI infrastructure future. Now, it also just speaks to these shifting dynamics in the AI landscape, Kelly, where models themselves are being commoditized, and the real moat is infrastructure and distribution. And certainly OpenAI has its eye on those two pieces. Over the weekend, Sam Altman posting about where they are, according to SimilarWeb, in terms of most visited website. I believe it's 5 or 6. No surprise, Google has the top with search and YouTube, and then it's the Meta properties. So OpenAI's chip ambitions, they're no secret in Silicon Valley. That Reuters report had some interesting new details on where they are in the process and the cost, starting at $500 million for a single version that may not even function. It helps explain why OpenAI is raising so much money. It's not just about pushing the frontier. It's about more vertical integration, making their process more efficient. Now, the rising stakes of doing so, that's where it gets really interesting. On the surface, this is a strategic move designed to give them more choice for training and running their AI models. It's supposed to reduce their reliance on Nvidia. This is something that Amazon and Google have been long working on and are now deploying in their own data centers.
In a groundbreaking move that could shift the balance of power in the semiconductor industry, OpenAI, led by Sam Altman, is gearing up to finalize the design for its first proprietary artificial intelligence chip. This ambitious project is more than just a technological endeavor. It's a strategic leap that could signal a new era for AI and chip manufacturing. The stakes are incredibly high as OpenAI aims to break away from its dependency on Nvidia's powerful yet dominant chips. Welcome back, everyone, to Investocracy.
You really don't have strong reaction after earnings for the majority of these Mag 7. Now,
the only one you did was Meta.
Yeah, and we're waiting for Nvidia. So I could be wrong on that because Nvidia could turn around and appreciate significantly.
Well, I mean, Amy, Nvidia, Evercore today says the DeepSeek sell-off was an opportunity into the print. They want a tactical outperform. They do report on the 26th. So you got to wait a little bit. By the way, from the 13F, I saw that Tepper increased Nvidia position by 8%. Little small bump up. And, you know, that stock has obviously been in question. I know you laugh because it's a small bump up.
8%.
Well, for a big fish.
Yeah.
For a whale.
Right. I think Nvidia's quarter is going to be fine. You know, you saw the CapEx numbers from all of these guys, and they were up huge, and that's going to be to their benefit. But from a long-term perspective, would I be adding to Nvidia right now? Probably not. You know, we've owned it forever. We had clients who would kill us if we sold it at the end of last year. Those same clients are saying, you know what, you can sell some now. It's funny how when something goes down 25%, people are less in love with it, and that becomes a little bit of a self-fulfilling prophecy. But look, Nvidia's a great company. They have a great position. The question in my mind is all about valuation. Should it be a $3 trillion company at this point?
Okay.
And I think that's a fair question.
OpenAI is set to submit its pioneering design to the Taiwan Semiconductor Manufacturing in the coming months. However, armed with a $500 million war chest for a single chip venture, potentially doubling when accounting for required software and peripherals, OpenAI seems undeterred. Behind this initiative is Richard Ho and his team at OpenAI, casting a David versus Goliath narrative against industry heavyweight Nvidia. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
Perhaps one of the more notable developments this week, Joseph, was actually what happened with AMD. Because if you wanted to be really bearish on Nvidia, you could say, well, you could use AMD chips. And I know people say maybe you know, some of the mega caps use their own chips and things like that. But what do you think AMD's results showed us?
Yeah, well, look, AMD's done very well. Year one, they did over $5 billion in kind of a startup product, a very impressive number. But NVIDIA is going to have around 85% share when 2024, kind of all the numbers are closed out. And I think that number actually can rise slightly in 2025. It's competing with NVIDIA is not easy. If it were, you know, a lot of other people would be doing it. And so we're enthused for AMD, for Broadcom, for Marvell. We see a lot of opportunity in this AI space. We like all of the stocks. But NVIDIA is our top pick because they are in a very strong position right now. And going into a product cycle where they're delivering on a capability of scaling out at a rack scale level and a data center level in a way that AMD is kind of still working to be able to do. So enthused for AMD's long-term opportunities, but I think NVIDIA will have more momentum this year.
Holding nearly 80% of the market share, NVIDIA's chips command pricing that could buy a small island. OpenAI is cracking the code to independence. If successful, their chip will take away from NVIDIA's market share, leaving them with independence and an audience that is craving a break from the monopoly. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Are you reassessing one of your favorite stocks, Nvidia, at all? I mean, what if we can call you know what on DeepSeek, the cost, right, of what they allegedly did, what they are purported to have done? It's almost irrelevant. What if that's just a moment that suggests it's going to become demonstrably cheaper to build these models? And that's going to have a transformative impact on the kinds of companies that have benefited to this point. They're just not going to make as much money as they once thought they could.
Right. So I think there's a couple of things that even OpenAI, if they were to make their O3 model, I don't know how much their O3 model cost or their O1 model, it's not 2 orders of magnitude more expensive to make than the DeepSeek model. It may have been, you know, a few multiples higher, not orders of magnitude higher. That's the first thing. Secondly, the total cost of the training of DeepSeek and, you know, all of that infrastructure, and also the fact that they were kind of trained on other models, other LLMs.
Right, it's open source.
Right, so because it was open sourced, means that you still need that base infrastructure. Now, I would remind you that CapEx numbers actually didn't come down at all. Google, Meta, maybe not Meta, but Google, OpenAI, Anthropic, they knew of all of these techniques and are using those techniques themselves.
Yeah.
The investment potential surrounding OpenAI's venture into proprietary chip design is rich with promise. Analysts predict that should the tape-out process yield success, the ripple effects could rock the stock market, making OpenAI not just a tech entity, but a key player in the chip supply chain sector. But what do you think? Do you believe OpenAI has a chance? Share your thoughts. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.